Hello traders, welcome back to the channel. This is Jonah with Trading the Charts Pro. And guys, this is one more for a weekly session where we break down the overall market to understand what is the market direction and how we should be planning to trade and play the market based on how we're seeing the charts projecting for the upcoming week. All right, so let's stay tuned. We're gonna dive deep and we're gonna break it down and drop some gems here for you right here, right now. Let's go. Alright guys, so we're starting off right here with the S&P 500. Last week was a super short week. The market was closed on Friday. However, due to stock market was closed on Friday, futures was still pumping, guys. So I'm very excited for this upcoming week when the market opens again, or typically when futures open on Sunday. I'm looking to see a very nice continuation in what the market was doing. So I think on Friday, we were way over the 4,000 level for the S&P 500. I'm looking at the E-mini futures chart, which is a product of the S&P 500. So guys, what we're seeing right here is the trend, or the bullish trend for the S&P 500 is still intact. Last week in the session, we were looking at this area being at first initially a potential double top. But we said that once price does not get rejected at a resistance level, guys, what is happening is price is just building a momentum, or building up enough momentum to break out and go higher. And right here, the second time when we touch the resistance, or the short-term horizontal resistance level, you can see price just build a quick bull flag, and now we break out. So we're out of this short-term double top right here. Now, what am I looking for in the S&P 500? I'm basically looking for the S&P 500 to run somewhere up here to the 4,900 to the 4,096 level, right? And by the time price get up to close enough to 4,100 on the S&P 500, we will be at a point where basically we're touching the uptrending resistance level, right? So from where we are right now, currently holding swing trades, I feel like they're in a pretty good place in terms of how much room does the overall market has to run to the upside before we get a short-term pullback, right? And as a swing trader or a day trader, we just want to be in the direction that the market is moving right here, right now. All right, so I'm still seeing price on the S&P 500 coming close to 4,100, and then when we get to that level, we may get a short-term pullback into the EMAs, and then I'm looking for the bullish trend to continue, guys, because the infrastructure plan, that has boosted the overall market, and I don't feel like it's over yet. We're just, the reopening story has pretty much just started to hit the ground, basically, where, what I mean is that the reopening is taking place right here, right now. So as that continue to go on, continue to get better, we will see the overall market continue to move more to the upside. All right, so I like it. Let's jump on over to tech, guys. You guys know that, man, I love tech. I've been beating the drum on tech that, hey, we still have this inverse head and shoulders pattern here that needs to play out on tech. So tech really was the low risk trade, basically. And now, guys, what happened? We got the breakout of this short-term downtrend, and we also got the breakout of this shoulder right here, a second shoulder of the inverse head and shoulders, and boom. So now this pattern has to complete itself. At what point will the pattern has completed? Well, when the price action gets back to 13,867. Then at this level, you know, that's where we'll be looking to take profits. We are currently swinging heavy, or a lot of, you know, tech stocks that were cheap, relatively cheap in comparison to the overall market. So when we get up here, then we'll start to bring in some of these profits and lock them in anticipation for, I don't know, can we break out and go higher? That's also on the table, because if you look at ES, you see ES, you know, still breaking out, making new highs. And now we're going to look at YM. YM on Friday, my chart hasn't updated, but on Friday we did get a breakout on YM, which is the Dow making new highs. So I'm feeling very confident that tech will continue to do something very, very, very similar. All right, so if we go back and look at the tech chart, it's like, where would you rather be at this point in time? Again, you know, there's the risk is still, as price continues to move higher, the risk start to get a little bit more higher as well. But at these levels, come on, man, the risk is low, and I feel like you want to own some tech stocks. You got to pick up those tech stocks that have pulled back to a very nice level where you can get them and ride them on to the upside. All right, so on a technical basis, the NQ, which is the tech sector, we're playing out this inverse head and shoulders pattern. We still got more room to go. That's what we're looking at. So come when the market open on Monday, you know, we're looking to continue swing trading some of these tech stocks. We're looking to day trade some of these tech stocks, and we're still riding this market up to the upside. All right, so that's how I'm looking at this thing. All right, guys, I'm gonna cover the YM. The RTY. This is something that I don't normally cover, but it is also very important. Why is it important? It's because RTY is the Russell 2000, right? And technically what I'm seeing here is that small cap stocks are trending as well, meaning they're in a bullish trend. So at this level, this was a good place to either hold a RTY contract long, right? So this around 2,200 is a good place, or was a good place to execute a long trade on RTY in anticipation of price coming back up to 2,352. So that's technically around 150 points swing trading RTY. All right, holding overnight and all that stuff. Yes, your account needs to be a little bit bigger for you to do this, but that's a place where you need to get yourself to where you don't have to just be coming in and just be day trading everything every single time. Once the pattern confirm, which here, you know, we had a very nice setup where we're bouncing off the 50 EMA. I just like these setups, guys. We broke back above the 10 and the 20. And I still like it right here, right now. The only thing is that at this level, the risk is a little bit higher, but I still feel confident that at 2,250, if you can get it at this level, this is still a good place to take a bullish trade on RTY in anticipation of RTY moving back up to 2,352 in that relative area right there. All right, we see the MACD histogram rounding out. The MACD also signal line looking to cross back above the zero line, coming back into the positive. This is just a bullish setup. This is a bullish situation where you can take a very nice trade above the EMAs right here, and your stop loss would technically be, let's say, below the 10. So if it breaks back below the 10, you're no longer in this trade, and we're looking to ride this thing back up to the upside. All right, guys, there's one more thing that I want to talk about, because I've been talking about this over and over, but let's cover it again. Remember, guys, I talk about the VIX, and I said last week that if price continue to put pressure on support, meaning price cannot bounce off a support level and go higher, like we see it did here, like we see it did here, like we see it did here, like we see, yeah, this was the last time. So right around this level, we realized that the VIX is pretty much, or was pretty much, building a bear flag at support, right? So boom, we had support, VIX building a bear flag, and we officially broke down on Thursday, right? And why is this important? Because this is very, very important, because ever since 2020, when the VIX spiked up, we realized that the VIX was continuously finding support around $20 level, right? So that means that every time the market would run up and the VIX would come back down to 20, the VIX would bounce and the market would top out or come to a top and pull back. Well, guys, look at what is really taking place right here, right now. We have a situation where the VIX has officially broken below 20, which means that the next support level for the VIX is around 1137. Guys, this simply means that the VIX is coming back to the way it used to behave prior to that 2020 COVID market crash. All right, this is also showing that the market still has more upside, because the VIX still, even at this level, is trading at 17 right now. It still got around $6 more to the downside. So think about that. If this thing continues to move all the way back down to 1135, guys, you want to be long this market. It just makes sense. The conditions support being long, not in everything, but in the right things, the right stocks that, you understand the story, the right stocks that the chart support price action actually moving more to the upside. All right, so this is how I'm looking at the overall market, guys. If you like this video, just hit that thumbs up, subscribe to the channel, and turn on your notification bell. And if there was something in this video that I did not cover, or you would like to point out, just hit it down there in the comments, and I'll be down there talking about it with you guys. Hey, thank you very much for watching. I'm Janoy, and I'll see you in my next video.